It's on. Hello, everyone. What a fantastic morning. We've had a lot of excitement. Where are we all sitting? Henri, I think you're going to sit next to me over here.
Oh, beautiful.
Yes. So much to get through. I had a little intro planned, but I think we all know where we stand right now. I think we understand the context under which we meet. You know, there's so much drama. One would only have to go and check out Twitter to see what sort of the prognosis is about the next implosion within the crypto space. But I want to say this, it comes down to trust. And I think there's been enormous erosion of trust. There's been an erosion of trust when it comes to the numbers that we're seeing, because they're obviously not telling the full picture. There's also, a huge erosion of trust of the people that we thought were legit, right? Completely blindsiding us, and we're doing some introspection to say, what were the red flags that we completely missed? I think Reza had made some good points about things that he was worried about with SBF and FTX. But I want to start with you, Henri, because I watched your last interview with SBF, and I've got a couple of questions because I think it's a good starting point. He said, and he convincingly said, that he was boasting, that 37 different countries regulated FTX. 37. And more than 90 regulatory bodies oversaw the company. You couldn't argue with that, right? Because that's what he said. So in other words, what were the flaws that we missed? What were the things that we were not asking? So I'm sure you've done a lot of introspection after that interview and after this whole thing has happened. What do you feel, and you've had interaction with SBF, what do you feel we missed in what he was selling us, in his company, that we need to be cognizant of going forward?
That's great. Thank you, Eleni. First of all, thank you to all of you to be here so we can share our passion for a future of finance and money with you all. Now, obviously, as you mentioned, Eleni had, the privilege of being SBF last public interview 3 weeks ago in Hong Kong, and you can watch that on my podcast channel on YouTube. I think what's been interesting with that, obviously, is that in the crypto community, and I've had the privilege of being in crypto since 2013, was that SBF was kind of the poster child of being regulated, of being best in class, being institutional, and obviously we all know how this unfolds. Unfortunately, I think because of this, there's a lack of trust will be there. I expect really increased regulatory developments, regulatory enforcement actually as well, not only on FTX executives, but also I think on the broader industry. But also I think what saddens me the most, Eleni, is really the public, right? You had a lot of not only the staff at FTX, but also a lot of people that made their first journey into crypto using centralized platforms like FTX. And these guys obviously got burned right now. And it's a very, very sad, I think, for the development of the industry. However,
yes,
I think we're going to see, I think there's some positive developments we'll see from there. Elements like governance, controls, transparency, all these things that we've been advocating for many, many years. Hopefully, this will be the catalyst, so we'll see it in the
Okay, we'll touch on sort of what the solutions are. There is a lot of emotion, there's a lot of anger, a lot of people losing their money. And then, even the previous panel, the question was, how is it possible that venture capital firms, private equity firms, didn't pick up what was going on? And we've obviously had briefing calls. The one thing is, we understand what reserves of these companies are, but what we don't really understand is what lies beneath the hood. And Alex, I know that SwissBorg, your company is really focusing on not only releasing the reserves, but a lot of other information that could change the game. Could you take us through that?
Yeah, absolutely. And just to take a little step back, guys, when I was interviewing Don Tapscott on my YouTube show, I asked him, what is trust? And he answered, trust is the expectations that the other party will act with integrity. And you can quantify that with time and a track record, right? But what have we learned? First of all, I'd love to ask a question to all of you guys here. Let's make it a little bit fun and interactive. Can everybody show me 2 thumbs up just to practice this together? This will essentially mean that you unequivocally and wholeheartedly trust what I'm going to ask you. 1 thumb up means that you partially trust, and it depends on the actor. And no thumbs up means you're zero trust. Everyone ready? Traditional financial ecosystem. Okay, those who have 2 thumbs up, you've probably been spiked with magic mushrooms this morning with your coffee. There's no way you can fully trust the entire industry. Okay, let's talk about centralized exchanges and crypto. 1, 2. Okay, let's talk about DEXs or DeFi. Okay, so A century of traditional finance, 10 years of centralized crypto exchanges, and 3 years of DeFi, and we all agree based on the tally here that we haven't found the actual solution for trust.
Yeah.
And what I can tell you is it's a combination. Trust is not just about integrity, it's also about verifying. Because in crypto, as we say, don't trust, verify. And I think what you mentioned about the proof of assets, I'm sorry to say, but that's only one small picture. You need proof of assets, but you also need proof of liabilities. Because what if those assets are collateralized somewhere? What if they're highly leveraged somewhere, right? Where you can lose all assets in a snap. And this is where crypto and blockchain can bring trust to the next level, right? You have regulation, you have teams, you have integrity, you have segregation of assets through custody. But the most important layer to bring trust to Trust 2.0 is to have real-time, on-chain data.
Yeah.
Public companies will give you financial reports every quarter. What if that could be live in real time on-chain where you can track all the assets, all the liabilities, see all
How
the
many
trading
companies
volume,
are doing that
and
right
access
now?
to that? Nobody, but that's
Why?
where we need to go.
Why
Because
have
I
we not
think
asked these questions?
We still have many skeletons in the closet,
But
unfortunately.
it's the simplest things, right? If you look at the normal financial system, we always look assets, liabilities, one for one. Can they match that? Okay, who's the lender of last resort? Central bank, whatever, we ask these questions. So Terry, I come to you now. A lot of these exchanges want to, do you not have a microphone?
I'll give you one here.
I can shout.
You could.
Decentralization.
There we go. These companies want to operate at institutional level. They want to be heavily leveraged, right? But they don't have a central bank for support. They don't have interbank lending. I mean, obviously, there are funders that kind of step in. But I want to take Genesis as an example right now, where Twitter is buzzing with, are they going to get the 1 billion in funding? Do they need 1 billion? Who's going to step in? Should we allow them to fail or not? And it just comes down to the actual system that we've seemed to adopt is the very system we try to get away from in the crypto space.
Yeah, I think if you look at even the most decentralized platforms, they rely on some centralized service at some point.
Closer.
Closer?
Shout.
Is that
there we
better?
go.
Okay. So even the most decentralized platforms rely on some centralized service at some point, whether it's cloud storage, whether it's clearing, whether it's settlement. And this, to me, is an indication of just a young industry. It's an emerging market. And the problems you're seeing at Genesis are really the fact that they're the one firm, they're almost like the root system for liquidity in this sector. There aren't enough firms providing the kind of liquidity that's needed, and as a result, you have this systematic risk if they lose liquidity, if there's a mismatch in their liquidity, or if they've taken on too much risk, which looks to be the case.
I mean, there's no capital adequacy ratios for these exchanges, right? Is there an acronym for any kind of crypto alternative? There's no one for one.
Well, it depends, and getting back to your comment about Sam's, 92 regulators, I mean, that was as fraudulent as everything else about the business.
Yeah.
And it's the devil's in the details here. So there's only one jurisdiction I'm aware of that properly regulates an exchange as a financial institution, and that's ADGM. If you're in the US, you're licensed as a software provider. You're not licensed as a trading platform and as a fiduciary for customer assets. That's like trying to fly a plane with a driver's license. It's just not suitable.
Yeah. Okay, so let's look at where we are right now. And the previous conversation, we're talking about this as well in terms of have we hit the bottom? Where are we going to from here? And I was talking to some friends that are heavily exposed, and they said, we're not only worried about where prices are going, we're now worried about the platforms that we're exposed to. So it is, a compounded risk for people. So I want to take beyond this bear market, and I think this is the second or the biggest bear market we've been in for Bitcoin at the moment. Where are we going from here, and how do we solve some of these issues? Because as I say, it's twofold, right? It's actual pricing, and it's the platforms. Henri, let's start with you.
Maybe just the thing is, obviously, what's happened the last 2 weeks, it's not a Lehman Brothers moment, it's not an LTCM moment, it was really LTCM, Lehman, Madoff, Enron at the same time, right? For sure, the crypto ecosystem will take a step back, but I guarantee you the crypto ecosystem will bounce back stronger, right? We've seen this in the past. I remember when Mt. Gox collapsed. At the time, this was 2014, I said, Bitcoin was a cute experiment. It's too bad it didn't work. And of course, the industry recovered. The thing is here, some of the problems we have very clear solutions. Ironically, many of them are in TradFi. having the SOC 1, SOC 2, you mentioned what are the solutions. We have internal controls, we have processes, procedures that have been in place for a long time. We have IASA controls that we have. And ironically, I would even say from a regulatory perspective, as a lawyer who's been looking at the space for a long time, even the regulators have done their part. We should not criticize regulators that easily. And I think we're going to see a level of specialization regulators. Dubai is a very good example where they set up the world's first crypto specialized regulator, for example, that enables them to ask the right questions, try to go a bit more in depth. Now, is the industry going to change? Of course. I think we'll see a flight to quality. The firms that have actually spent the time and energy to build these institutional grade businesses will benefit. And also, I think as an industry, will reward maturity. I remember I'm seeing many of you wearing suits today. I remember the first crypto conferences, people used to make fun of me because I used to talk about KYC AML, and my nickname was Suit Henri. Because I used to come from a bank, and I used to come at the crypto meetups. Now I think finally, after what happened with FTX, we're going to reward maturity, experience, and walking around in a t-shirt and running shoes with fuzzy hair will not be as cool and sexy as we thought before. That's positive.
The point is, whether you're wearing a suit or you're wearing sneakers with high socks, I mean, we need to treat everyone, all the players, with the same dose of skepticism and ask the tough questions, right? And not look at what sort of the behavior or what they're selling us in terms of whether they look like us when we're relaxed. That's, for me, one of the biggest lessons. Alex, I want you to jump in here, and I really want to talk about contagion and what you're expecting and whether this is a pivotal moment in time.
Yeah, absolutely. So for me, first of all, the technology has not moved a single bit. The technology is just getting better. So don't let bad actors kind of create these clouds in front of you. That has nothing to do with what we can do with the technology. And I can guarantee you on-chain technology is scaling at fast rates. When you look at L2 solutions, it's really incredible what you can do. It's getting closer to traditional finance in that sense. But for me, if you're doubting, just think about this, guys. The 3 biggest financial institutions in the world for assets under management, when you go from BlackRock to Vanguard to Fidelity, are all into Bitcoin at least, are all building infrastructures. PayPal, which is one of the biggest payments infrastructure in the world, are building on-chain infrastructure for payments. I mean, where's the validity here? NASDAQ, the second biggest exchange in the world, is also building institutional-grade custody for crypto. Yeah. So we're just talking about the biggest institutions in the world. The technology has not moved. Have we bottomed out is a good question. I do not think so. Maybe we can go a little bit lower, but when you look at Fibonacci retracement levels, 78% is usually the maximum all-time high. But when it comes to opportunity, right now is the absolute best opportunity to get into crypto and to start building up a portfolio.
What platform would you use then to get into crypto?
The trusted ones.
The trusted ones with SwissBorg, clearly. Thierry, I want you to weigh in here. The contagion issue is the most important, right? Because we've seen what happened with FTX. We see how many companies were under FTX. We're waiting to understand, just the gravity of the situation. But I actually just had written down what the new CEO, who actually, interestingly, also helped liquidate Enron, said never in his career had he seen the failure of corporate controls. The situation is unprecedented. Are we going to see more examples like this?
Definitely.
Are you pricing this in?
Definitely.
Wow.
And it's not that everybody's fraudulent. I think, SBF was exceptional in that regard. He really, went all the way.
Were you duped as well? Were you blindsided by his character?
Yeah, I was surprised. I mean, I've dealt with him and many of the people around him, and, he struck me as idiosyncratic. But it never struck me that those idiosyncrasies were actually outright fraud. And I think that's true of many of the people who've worked around him. So, I think the ecosystem, for the most part, is caught off guard. I think what we're seeing here, and I'm long-term positive about blockchain and crypto, primarily because of the social and economic needs that are driving its adoption. But I think we're in for a multi-year process of reinvention, of development, and there are 2 reasons for this. There are structural changes going on in the crypto ecosystem. This isn't your typical bear market. Anybody looking for a pivot in the next couple months is dreaming. And on top of that, we have, I think, structural changes taking place in the global economy. So the question remains whether a highly speculative asset like crypto can survive in an era where you have high interest rates and not easy access to capital. Yeah. So the dynamics that have fueled the growth of crypto no longer exist. And so the question is, where does crypto find its footing? Where does it find its adoption? And I think that's going to take some time to work out.
Yeah. Alex, what happens if Genesis folds?
That would be really a disaster, and the reason why it is because not only the contagion, but also DeFi is affected, like...
And it's exposure, right? Because there's so much exposure.
Yeah, absolutely. So what I would love to see from this contagion is even the DeFi projects to actually show their treasury, to be transparent on their proof of reserves. Because the biggest opportunity here, this is the most asymmetrical asset class in the world, if you look relative to previous all-time highs. And it's building the digital infrastructure of tomorrow, right? Web3, going from Web2 to Web3. So you have tons of opportunities from layer 0, 1, 2. Layer 0 is essentially like a desert where you can build the beginning of your bridges and roads. A layer 1 is like a digital roads and bridges. And then layer 2 are all the buildings and things that will help you, the private lanes that help you go faster. So everyone should have a percentage, at least in Bitcoin, of their portfolio, even 1%, because it's so asymmetrical. If Bitcoin goes back 100%, you've already made back, that's 1% of your portfolio of gains, which is great. But on top of that, one thing we need to consider, though, is really to make sure that DeFi and all these layer 0, 1, 2 protocols are transparent about their corporate treasury.
Yeah.
And really understanding that they're not going to fail and go under, and show us that we can really trust them and move forward together.
Okay, by show of hands, who thinks Genesis is going to fold? Yeah, interesting. Do you think that the industry should come in and save Genesis? I mean, hearing different numbers. $1 billion is what they need. Now it's 500 million.
The irony of Genesis asking for charity from the ecosystem is, I think, just
well,
too
I
much
mean,
to bear.
normally banks would have a lender of last resort that call up the central bank, hey, yo, I need some liquidity, can you help me? So, I mean, the point is we don't have that support in the system. We should let it fold?
No, but I think if they want community support, they've got to be a lot more transparent about what the issues are.
Yeah.
And there's been a complete lack of communication and transparency, which simply makes the matter worse,
Yeah.
especially to creditors.
Henri,
But also the industry will get stronger as well. Guys, let's not forget 2008 when we had all these hedge funds and the buy-side firms had exposure to the big Lehman and others. Post-event, counterparty risk became a bigger issue. We got more transparency from the banks. The banks launched insolvency remote vehicles. I think all these things now we're going to start seeing. Until 6 months ago, if you ask these questions to a crypto exchange, they'll tell you to go away. And finally, I think this will force about some of these counterparties to open the kimono. Whether it will be proof of reserves or getting other types of controls, the industry at least will be stronger. Unfortunately, there's going to be this pain in the interim.
And we're going to have pain now. Give me some numbers. Are we expecting a lot of companies to fold? Are we expecting a lot of... Give me a sense of what you guys are pricing in. I'm sure you're all scenario planning. Alex.
Yeah, so I think, regulatory clarity is what's going to come in first. And I think the good out of this is the fact that regulators will accelerate their process and really give more clarity. So I think that's one of the good things. And I love the fact that us as companies in the industry, we're starting to self-regulate ourselves because we want to restore trust. So we're obliged to be as transparent as possible. So I'd really like to look at, rather than who's going to fall, who's going to go bankrupt, I really want to see how this is helping us. Sometimes you win, sometimes you learn. It's important that we learn from our mistakes and that we take the right steps to rebuild trust with everybody in this room and show them that there is a bright future. So I'm sorry, I'm a very optimistic person, so I love to see it from that angle.
Look, Terry, have you, because of what happened with FTX, changed the way that you are, collaborating with other companies, changed the questions that you'll be asking, being a lot more skeptical, thinking more about the regulatory framework, what's working and what's not when you're looking at engaging with other partners?
No, we have no exposure to FTX. We weren't investors there. Yeah. And we've always been, I think, conscious of the regulatory environment. That's been our approach. And we've always, I think, been thorough about due diligence. Now, may we see some exposure with what I think is the coming contagion? Most likely. Yeah. But we're not overly exposed in any one direction. So I think, this is a moment where our risk management, I think, only sort of proves its case.
Okay, so we've got about 5 minutes left. I want to talk about what kind of regulation is going to be, hopefully, sort of feeling like the silver bullet to these problems that we're facing. And then secondly, the theme of our panel is beyond the bear market. What pain do we need to feel to be able to move forward. I mean, Deepak Chopra said this. He said, you know, we over-glamorize hope because hope doesn't come without despair, right? So they go hand in hand. Should we start with you, Henri?
Yeah, from a regulatory perspective, I think actually today, according to Cambridge University, only 5% of regulators do not have a team working on crypto. I can tell you I've been involved with many regulators around the world, and the average regulator is probably more knowledgeable on crypto than the average financial services professional. I think we'll see regulators be a bit more specialized. Again, I was mentioning Dubai is a very good example of that, but I don't think that would necessarily solve every single problem. If somebody's committing fraud, lying like we saw in some of these cases, I don't think you'll be able to address that. I think we also need to think about it outside the box of new challenges that will arise. For example, DeFi. DeFi, by the way, continued to operate perfectly well. But then how do we actually put the right safeguards? We're not in the risk avoidance business, but in the risk management business to ensure we can put the right safeguards to ensure there's no sanctioned entities, there's no money laundering taking place on these platforms. And I think this is where we need to think outside the box, or sending a questionnaire where you tick the box is not the right way. But thankfully, with some of these new offerings that we have in the crypto space, we have the tools to address some of these problems in a smarter and a better way. So I think that's what we'll see moving forward.
Yeah, it's a really good point. I mean, a lot of the exchanges in the world are scattered all across the globe, but really they're going to have to pull back and come into specific countries because regulators will be asking more and more. They'll have higher and higher expectations and requirements in terms of documentation. So it's really going to pull a lot of people back, and you'll have, just like a few of the US exchanges, a few in Europe, and you won't have just everyone battling for one specific all across the world. And I think one thing that's really important is in the DGen world, they need to understand that the regulators are not to punish you. Yeah. They're here to protect you. Yeah. So we need regulation. For the safety of all users, it's really, really important to have that clarity. And I think one thing that's kind of crazy, kind of out there, but I do want to share it. I do think that regulators should actually have their own ledger. And they should actually have a tech division for them to play with the tech, to understand the tech. And once they understand it, they'll realize that guess what? This technology helps them. It is the most transparent. It is the most verifiable. It helps connect the dots for them in ways that they've never seen before. So really, I'd recommend them to start using the technology.
Terry.
Yeah, I think, we are probably accelerating the move to clear, stable, forward-looking regulation that can help firms operate responsibly in the space and give customers confidence and protection. That, except for ADGM, that does not exist right now. I think, unfortunately, regulation often responds to crises, and this is obviously a crisis in the sector, and it won't prevent the damage that's already occurred. Regulation moves at a fairly gradual pace. It will be years before that's in place in most jurisdictions. And so for the folks who are caught up now, they're going to feel a lot of pain.
Two final points that I want to make. Nurul Rubini, who, by the way, has been keeping us on our toes since Abu Dhabi last week. I think we've all been glued to our phones taking a look at his comments. And even again today, he said, this isn't a bear market, this is the start of extinction. Which, I mean, is an interesting perspective, absolutely, but the whole, genesis of crypto was to be an alternative. I come from South Africa, from emerging markets. I know the drama of hyperinflation, for example, like Zimbabwe, where you have fiat currencies. I know what that does to countries like Lebanon. We've seen, similar scenarios playing out. Crypto is an interesting alternative to the current system, right? Is this the start of extinction? Are there hallmarks? Are you worried? I know you're going to be talking your own book. Let's be honest, this is what we do. But if we do not take the right path, are we in trouble?
I have a story to share, which no other financial institution can do on the planet. And it's a personal story.
Yeah.
My dad is in Iran. During the pandemic, he was struggling. He lost a job because of the sanctions by the US. He lost access to the entire banking grid. Even though he went to study in London and in Dublin, he lost his bank accounts in the UK. He lost his bank accounts in France, completely written off the grid. And the only way where I could help my 78-year-old dad was to send him Bitcoin so that he can go to the local Sarvasi to exchange it to local Tuman to buy his groceries.
Wow.
Tell me one banking institution that can do that across the world, that is anti-political and that really is borderless. Nobody, and that's how I would end there.
Yeah, that's a really brilliant point. And there's so many stories, by the way, that I share with what I hear across the continent, in Africa. So really fascinating. Another question, just a practical one. So we're on platforms. We've got we all basically have exposure here in some way, right? We're all in crypto somehow. Do we move everything to cold wallets? Is that the new vibe? Is that what we do? Terry is like, yes, absolutely, do it.
If you haven't done it yet, do it now.
Oh, do it now, okay. All right, fantastic, okay.
Not your keys, not your coins is such a one-sided part of the story. Because not your keys, not your coins also means if you lose your keys, all your wealth is gone. And by the way, guys, there's been more wealth lost through losing private keys and Web3 wallets than all the exchange hacks and bankruptcy in the history of crypto. So just be careful, guys. If you want to manage your private keys, this is not where you can go see your concierge and they'll give you a second pair. This is you lose the keys of your entire house. So be careful.
So what, like, do we sit tight now? We just watch our portfolio melt and then...
You know, my advice to everybody on this is you may love Bitcoin, you may hate Bitcoin, you may love crypto, you may hate it. I think we all have an intellectual and fiduciary duty to at least understand it. You can listen to Nouriel Roubini or you can listen to others. Take some Bitcoin, take some crypto, experiment, do a cross-border transfer. See how it works, and then you make your own decision. You may love it, you may hate it, but at least I think we have a moral duty to at least try to understand it. I believe we're the lucky generation who's seeing the future of finance in front of our eyes. Our kids will ask us about this period today that we are seeing the future of finance. I think if we all do our part to try to understand it, we're already a big step ahead.
We're part of an amazing experiment, right? That is hopefully going to become entrenched in our reality. Gentlemen, you've been fantastic.
Thank
you so very much.
Can we get a 2 thumbs up, guys? Yeah?
Thank you.
All right.
Thank you.
Thank you so much.